Take a look at shares of Target soaring today, hitting an all-time high after posting its biggest sales growth in 13 years. In an exclusive interview on Squawk Box earlier today, Target Chairman and CEO Brian Cornell addressed how the company is dealing with the competition.
We compete with everyone, so we got to be on the top of our game.
But come on, it's Walmart and Amazon, right?
Well, those are two big players. I think about them every single day. And we measure ourselves against their performance. So we're fighting for those trips. We're fighting for those footsteps. We're fighting for the clicks. And right now, I think we're starting to build momentum.
Well, will Target be able to maintain that momentum? Let's bring in Liz Dunn from Proforma and Michael Lasser from UBS. Liz, start with you. Why do you think they'll be able to maintain momentum?
I think they're doing a tremendous job sort of investing in digital, investing in experience, reinvigorating some of the brand energy in their stores. And they've really started to get to the point where they've gotten to a tipping point. So the digital part of their business is large enough that it really matters. And they've reimagined the sort of magic of the Target run.
Yeah, Michael, the traffic that they had coming in had to impress you. I know you have a neutral on the stock, but give me your sense as to what that meant. I think it was up, what, 6.4%?
Traffic at Target was up 6.4%. It was a pretty remarkable outcome, especially in light of all the changes that are going on in the retail landscape. What's been striking about this reporting season from retail is the breadth of success that we're seeing amongst the traditional retailers. The vibrancy of retail trade areas is coming back to life. And Target got its fair share of that this quarter, so credit to them, for sure.
One thing not to like, if you had to pick something in this report and in many others, Liz, is margins have been declining. I mean, these companies are spending to get back to growth. Is the market saying that's okay with us right now as long as you're growing e-commerce and growing comps like this?
Yeah, I think the market is saying that, and I think we're getting to the point where they are still growing the bottom line. And so while margin is still a little soft.
But how much of that is the lower tax rates?
Some of it, for sure. But I think on the whole, growing operating margin dollars is a success for many of these retailers. I think if you look back 5 years ago, many of them were cowering against the threat of Amazon, and now they were tepidly investing. They had single-digit percentages of e-com. Now they've invested, and they're leaning into that investment, and it's really beginning to pay off in terms of top line.
Michael, how many of these retailers are just benefiting from what many are telling us is incredible strength for the consumer and not necessarily benefiting from what appears on the face of it to be improved execution?
I think it's a combination of both for a lot of these retailers. Now, we've seen clear examples how some are doing better than others. Home Depot versus Lowe's is a good example of that. And so credit has to go out for those that are doing well. But it is undeniable that the consumer has more money to spend, more consumers have jobs, and as a result, their spending is improving. We think that continues for probably a couple of more quarters. And then it's anybody's guess if that momentum can be sustained into next year. The other point is that while the market's focused on the top line right now, eventually the focus will be on the profitability and the flow through. And we're seeing that the cost of doing business across retail is rising, and that's going to make it more difficult for a lot of retailers to grow their earnings over time.
It also shows you, Liz, who's not necessarily doing a good job. It's not, I mean, a rising tide has lifted a lot of boats, but there's a JCPenney and Sears are the two that everybody's naming. L Brands is going to report after the bell today. That has been a stock that has lagged, and the results have not looked pretty, especially for Victoria's Secret.
Right. I think that they have definitely had a tough go of it. Part of the problem is that they were such a strong performer for so long, they didn't feel as much pressure to innovate as many of the others did, particularly many of the other mall players. So you're seeing a lot of the mall players do quite well, particularly in like the teen space. But L Brands, they had such a dominant brand, and still do, with Victoria's Secret, and they didn't innovate quite as quickly because things were going well. And now I think there's a lot more competition. Brands like Aerie are certainly taking share, and I think it will continue to be tough for L Brands for some period of time.
So you're not expecting these kind of numbers?
No, not at all. No.